Hi there, welcome to Kneppy Invest. No prizes for any viewers who rightly predicted I would do a video on Appen. I just had to do it. Share price down 40% on a quite negative announcement. Now, whether the share price deserves to be, or this company deserves to be 40% lower in valuation than it did yesterday on the back of this particular announcement remains to be seen. But this company has been continually disappointing the market for the last 3 years. And in fact, the valuation of this company has fallen approximately 99.9999999% over that period of time. And of course, I'm exaggerating just a little bit, but for shareholders of this company who have held since the share price was $42, I think that was the top back in August 2020. For those shareholders, it has been a disastrous 3 years. And I'm not sure there's any light at the end of the tunnel for this company. Maybe the story of Appen should be titled From 60 million to 5 billion back to 60 million, because that is the market cap this company has experienced since it listed on the ASX back in 2015 or somewhere back then. When it listed, the company had a market cap of $60 million. And between about 2017 and late 2020, there was a lot of excitement in this company. I got caught up in that excitement simply because the company released a few profit upgrades. And for those who know me, know that I love profit upgrades, particularly if a company releases a few over a fairly short period of time. And that's why the share price and the valuation of this company took off in 2017 and kept going up all the way to a high of a market cap of $5 billion. Just shy by $5 billion, to be truthful, in I think it was August 2020. And since then, things have just been going worse to worse to worse for this company. And that's why the market cap of Appen has fallen from almost $5 billion to a current market cap of only 60 million. Now, this is from Guru Focus. As it says, the market cap is just under 100 million, but that's before the 40% drop in share price on the 22nd of January, 2024. So this is my Matterhorn pattern. We have seen this sort of pattern over shorter time periods for a lot of unprofitable tech companies on the NASDAQ, simply because of rising interest rates. Now, those companies might be a little bit different than Appen, simply because I think the headwinds for Appen are significantly stronger than those non-profitable tech companies. In fact, some of those non-profitable tech companies possibly have reached their bottom, and now might be a good time to look at those companies, because instead of an upgrade cycle in interest rates, we could be seeing interest rates drop, and those companies will benefit from that. Appen may not benefit from that because this company is again facing significant headwinds. Well, those headwinds are 100 miles per hour right now, and I'm not sure if they'll be able to get over those headwinds over the next few years. It remains to be seen. So here is the announcement that caused the share price of Appen to drop 40% in one day. There's actually two aspects to this announcement. The first one is a customer update, and you get no feeling whether that customer update is positive or negative just by looking at the title. And they also released their financial year 23 preliminary results. Now, if this particular announcement was just titled Financial Year 23 Preliminary Results, I could have seen the share price rally because there were some good things in their results, which I might touch upon in a second or so. But the first part of this announcement was a customer update. And the market disregarded the preliminary results because that does not matter anymore, because this customer update is significant. And it comes back to their relationship, or Appen's relationship with Google. It's not going to be there by the 19th of March 2024. So Google, as a part of the strategic review process, will be terminating its global inbound services contract with Appen, resulting in the cessation of all projects with Appen by the 19th of March 2024. So no relationship between Appen and Google by 2024. And I believe Google might be one of Appen's largest customers, if not their largest customer. And this was a problem with Appen a few years ago. I think 80% of their revenue came from a few customers, including Google. The new CEO, I believe it was a new CEO, who was trying to diversify their revenue streams so the company could not be hit hard if they lost one of their big customers. And you can see what could have happened and what did happen when Appen eventually lost one of the biggest customers with Google share price down 40%. The next statement here was really interesting. I don't think it was a good thing to include that you had no prior knowledge of Google's decision to terminate the contract. This just shows me that the relationship between Google and Appen was actually already strained. You would have thought that Appen's management might have had an inkling that this relationship or this contract was under threat. So I don't think that was a good thing to include in this announcement. Maybe ignorance is bliss, but in this case, I don't think ignorance is bliss. I think this is actually a negative. It definitely has a negative look on Appen's management, whether they know what is happening to their own company. In financial year 23, Appen's revenue from Google was 82.8 million. I forget how much revenue Appen had. It was, I think, under 300 million. So it was a fair amount at a gross margin of 26%. I probably also mentioned, I think Appen's revenue from Google was on a lower margin. So if he did actually put a positive spin on this, I'm not sure how you could do that. Positive spin is they are losing a contract that was on low margins. Possibly. Now, don't quote me on that, but I just would think that a gross margin of 26% does seem quite low for one of Appen's customers. Now, let's have a look how this company did perform in financial year 23. And if this is all that was included in the announcement, I could have actually seen the share price rally. Yes, I could have actually seen that because it looked like things are moving, maybe, or starting to move in the right direction. Wouldn't quite say this is a turnaround story just yet, just based off this particular slide, but things might have stopped dropping significantly in terms of revenue, underlying EBITDA, that sort of thing. So Appen recorded revenue of 24.1 million and 25.9 million in November and December 2023, along with execution of cost management initiatives, which enabled achievement of cash EBITDA break-even objectives. And that is actually quite a good positive, that they are now underlying EBITDA positive in December 2023, excluding FX, 3.2 million, underlying cash EBITDA, excluding foreign exchange, of 2.3 million. That would be a positive, even though it's only in 1 month. Revenue of 273 million and an underlying EBITDA loss of 20.4 million for the full year. So based off December 2023 numbers, possible turnaround happening for Appen. And then they also included the loss of this Google contract in this announcement. $32.1 million cash on hand. Of course, this company has done a couple of credit raisings in the past 8 months. I think it was May and a few months ago. So they should have plenty of cash on hand. And funnily enough, I doubt this company has much debt, if any debt at all. With a market cap of around 60 million, this company has an enterprise value of 28 million. So the market thinks this company probably, or more than likely, won't be in existence for much longer. Another interesting comment that the manager did make is this particular statement here. Appen will immediately adjust its strategic priorities following the notification of the Google contract termination. Now, in my opinion, management of a company should have a plan for all different types of scenarios, bad and good. So Appen management should have had a scenario where they lost the Google contract. And this is what we're going to do if that happens. So I'm not sure if they had that in plan, but they are going to adjust their strategic priorities. So it's going to be really interesting to see what they come up with. And more than likely, they will release these strategic priorities, or how they've adjusted their strategic priorities within the next few months. And to finish up, just have a look at Appen's chart. I wasn't going to include this initially, but I thought, why not? Share price of Appen has been a well-defined downtrend. In fact, it's been a well-defined downtrend since about 2021. Share price has fallen from $42 at its high in August 2020, at the peak hysteria in this company. Valuation of $5 billion, or just shy of $5 billion back then. So the market absolutely loved this company in 2020. Actually, it was between 2017 and 2020, and the share price has fallen from $42 all the way down to 27 cents on January 22nd, 2024. Massive volume coming in on the day, which is understandable because this is some negative news. I wouldn't say that the low has been reached. In fact, the share price on this particular day, this January the 22nd, a range between about 34 cents and 27 cents, and the share price finished or closed at or near the low of the day, and that is not a good sign moving forward. Not be surprised to see share price dropping even further over the next few days because of that, because of the high volume coming in, and maybe eventually some deep value people will say, well, enterprise value of $20 to $30 million for this company is attractive, even though there is a significant risk about the future of this company. So I wouldn't be surprised to see some risk takers, some deep value people, investors get interested in this company. But again, high risk. That is all I have for this horrible day for Appen and its shareholders. Share price down 40% on the loss of their relationship with Google. Market didn't like that, even though you could argue there were some good things in their financial year 23 preliminary results. But the market didn't care about that. They just completely focused on the loss of the Google contract. This is a big loss, and that's why the share price has been absolutely pummeled, down 40% again. If you have any questions about Appen, maybe you did find some silver linings in that financial year 23 preliminary results. You completely ignored the loss of the Google contract. Are things starting to turn around, even if they did lose that contract? And maybe now is the time to think about buying some Appen shares on the discount. Or maybe the share price will keep on dropping, and maybe the future of this company is now in heavy doubt. Anyway, leave any thoughts you have in the comment section of this video. And anyway, probably the last thing I should say is I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.